City said the team.
All right, ladies and gentlemen, welcome back. Another episode of Chart Talk coming at you. Bennett, how we doing over there?
Doing good. How are you?
Oh, man, I'm doing terrible. It's 35 degrees in Denver. It was 90 degrees yesterday. Much like the stock market, everything's cooling off.
Okay. Oh, good market.
Yeah.
How many of these upside down hats do you have?
Ah, man, there's only 80 of them worldwide, only 80, and I got like 60 of them. Whatever, some light, whatever. I got every color of the rainbow, okay? That's what I got, okay?
Hey, fellas! Look what I found in my pocket! Look! A year's salary right here! What I call them? Fun coupons! See that? A fun coupon!
All right, Jake, you want to jump into the market outlook?
Do it. So all right, market outlook, folks. So finally, the parabolic run has come to an end, at least for now. We saw the sell-off in the SPY, and it was especially dramatic in the NASDAQ names, and that's where we're really seeing it right now. So all uptrend. We've kind of focused on this obvious, very support line, this ascending trend line in the NASDAQ. And it's very obvious. And now we're kind of testing the area. We're struggling to break down from the area right now. It's kind of an inflection point. I think if we break this area sharply and we see some downside follow through, we could probably test. We could see this correction get pretty ugly. But I mean, if they put up a fight right here, we could see a turnaround right in this 270 area. I'm not really sure. Bennett, what are your thoughts over here?
So I'm going to just have a couple of charts I emailed you over. So we'll start with the NASDAQ first. The main premise of this was just, for us, again, the big picture, the weekly newsletter, we focus on dollar cost averaging into the major markets as well as the sectors. And there also is time to rebalance and take some profits in some of the overextended sectors and markets, and then putting them back to work in some of the ones that haven't been performing as well. So we have a quick little rundown. We have, for NASDAQ, we had the lines run out. We were just moving up this trailing stop, and we luckily got stopped out before this little pullback. Next up, we have same thing with the SPY. You can see these little green dots. Those are the times that we're buying. We're dollar cost averaging higher in the SPY the past few months, and it's been probably one of the easiest dollar cost averaging times that I've ever seen, where you just bought and it just kept grinding higher.
Wait. What about this first green in March? I don't see another green until mid-April. Was that part easy? Was that easy?
That was not.
That was not easy. All right.
That was not fun. Right. Not fun at all. Though after April, it got very easy. But that was, all right, not fun. But yeah, so you'll see a similar theme going through the SPY, VCR, BDC, and VGT. Same theme. Again, dollar cost averaging up. Wasn't very easy in February and March or April, but it did get easier after that, the last quarter or so. But again, in all these sectors, they ran tremendously, and we kept upping these stops and dollar cost averaging on the way up. We did start to get stopped out of some of them for profit, again, not the entire position, but for some of the higher cost bases in these sectors. That's what we want to take off first, so we still keep that better stock, from March and April. And then what we want to look to is look to the sectors that haven't been as hot. The utilities, the REITs, energies, and financials have been, four of the sectors that haven't really participated as much in this overall rally. So when we talk about rebalancing as a whole, we sell some of those leaders like technology or healthcare, and then we rotate back into some of those sectors that haven't been as much in play. Because again, we're looking on a much more longer time frame, not as intricate as the swing trades that we take. So that was kind of the overall lesson this past week, that a lot of members did take advantage of that. We can't lose any stops up. That's my little piece for this week's shape. And if you want, we can get into some of the member ideas.
Let's get into them.
All right, we're gonna start with
Jump on
Brian. With Brian, he's looking at BABA. He wants to buy up through the high a day versus the low a day. And so Doji.
This is, I'd imagine many of these trades are going to be very market dependent. And currently, after hours, we getting smoked. I might buy a gap down tomorrow, but I mean, it depends. So I love where he's gravitating right now, and this is kind of the same shit I'm doing right now, is gravitating towards the best and strongest names with a ton of liquidity. That's the first thing I look to when I'm trading these, kind of the first down move after a while thing. So, and he's trading. It's looking for a support buy at this previous resistance level, and this is a big. We'll see if the support level can hold up. Then yeah, it's good. Obviously, we want consolidation and we want all these things. But I mean, when the market moves this quickly, we rarely get proper consolidation and all that. So. Knowing your levels is especially important right now. If this took out the high of day, the 274 area, yeah, I could see it. But I mean, with the market action right now, I don't think we're ready to bottom just yet.
Yeah, I think even with this name, if even like the longer term trend lines in BABA, if this can come back to like even like 250, I think you have a much better spot than here. You almost have to kind of be perfect buying it. Here where it might not be fully ready. The other one is Doc U. Similar setup. He wants to buy to the high a day, first the low a day, just because it's pulled back 80 points in 4 days.
All right. So I don't hate this. Look at the earnings move it had, because they had monster earnings, one of these work from home stocks, and then the market had the crazy sell off, and then that's what we're seeing. So what he's doing is just gravitating towards the leaders, tight inside day. Didn't really sell off with the market. I mean, it was down 5%, but I mean, in the grand scheme of things. This name is moving like 10% every day. So I don't hate where how he's gravitating towards the strongest names. I don't know if this DocuSign's ready yet, but I do like it.
Yeah, I like this one a little bit more. If you were to even draw like a horizontal trend line, like that's holding support in Docu, like
I drew it. Don't you worry, I drew it.
Yeah, so you can see here, like it's much closer. Where like in Trababa, it's much more of a stretch to kind of call that like support work. Wow. You draw that one out. Kind of showing us like that 250 area versus the recent area support that has been holding. That was just between those two examples, like that Docu looks a bit better. And then lastly for Brian, he's looking at this RNG, similar thing. He wants to buy up through the high day versus low day.
All right, yeah, okay, yeah, support buys, inside day support buy. Mm-hmm. And if we get a bounce tomorrow, I don't mind any of these setups. We're looking at a gap down, but I might buy this gap down. Well, I mean, it's a big. We'll see. If it takes out that high a day, then yeah, enter that one. Fuck it.
And then even with this RNG, it's like this is a perfect example where like a lot of traders, and this even refers back to Natalie's question a few weeks back about the support buys, where this is like RNG reminds me of one where like everyone wants 250 to hold, like the people that are in it, where it's so perfect where if it was to shake down through, it would kind of get off a lot of people's radars or shake people out. Where that's almost when I want to be buying up to 250 or 260 after that shakeout. I think it'd be a little bit better of a setup than having to have these perfect that's got to hold this exact support line and go higher when the market is gapping down.
What if the shakeout was Friday's action when it went from 277 to 250? That's pretty shakeout, eh?
Yeah, we're going to find out tomorrow if the market's gapping down. I don't think.
Okay.
Let's see. All right. Next we got Bobby Moore. IRM through 31.
IRM?
IRM, yeah. Iron Mountain. It's a REIT.
My keyboard is fucking giving me some trouble. Nah, I don't like this one. Very simply, it's just kind of like grinded up towards this area. It looks like it's kind of running out of steam. It could, if it flagged out, look to bust through this area. But knowing that this is a REIT, it's not a name that moves with power too often. So, I'm just kind of avoiding these setups right now. I really only want names that I know will be moving and, have liquidity and all that.
And even talking about this REIT, like RRM pays an 8% dividend, which means that every quarter it's easily paying out about 2. So you'll see you'll see the stock gap down a lot. It's not anything news related. Just when the stock's paying the dividend out, it's going to gap down. So if there was something from a trading standpoint, it's like you don't want to get caught in those 2% gap downs just get a dividend. So from a swing trading standpoint, I'm with you. Probably better stuff out there. Next, we got this BWA through 43 versus 40. So he wants to buy through this like earnings flag high versus support.
Nah, I don't really like this one either. It's just kind of moseying higher, and you're at the top of the trend right now, and the market is showing us it's ready to pull in. This isn't one of these names that's like a high flyer or anything like that. This is a grinder, so I don't want to buy the top of this range right now.
And then lastly for Bobby is DAR, earnings flag to that 34 versus 32.
If it comes back to that 34 area, then it'll look very attractive, so I can't say no to this one. But, I mean, more sideways the better here. It just failed that area today, so we'll see.
All right. We're going to jump into some of the social media questions. We have Kelly Farnell. She's looking at ISRG. She wants to buy up through 700 versus this 674.
So, I mean, we usually get a lot of like silly social media questions. This is, I'd say, one of the better ones because this is a name we took this trade from. This might have even been a trade of the week through this like 702, whatever it was, and it gave us that pop. And now we're seeing the market come in. It's selling off. So on the way up, she's saying buy this one. So I like that aspect for sure. I don't know if it's 700. I don't know if it's ready for 700, specifically. The day's range was 717 to 692. So, that 700, I know it's a nice, pretty number, but it's not super relevant, at this moment. But I mean, she's looking to buy the right names on the way up. So yeah, wait till this one comes in or shows it wants to make a pivot or something. I don't think it's ready tomorrow, but gravitating towards the right names.
Okay. Next, she's looking at this SNE. She wants 70. She wants to buy 75 versus 74.
She wants to buy 75.
Yeah. Gotta remember these social media questions. They're not. She hasn't gone through our lesson, so.
No, I get it. No. So I mean, It's just like fantasy land is what. So last one was really good. This one's just kind of like doesn't make sense to me. So it closed at 76. You want to buy 75 on the way down and just have a stop at 74. The probability of that trade working out is so low. It's pretty ridiculous. Not to be condescending at all, but it's just like very low to buy something on the way down and then have it not touch the dollar lower just because there's a support level there. It's just very low. That's why we always focus on support buys on the way up. So if it takes out that level and reverses to the upside, that's when you look to buy it. Then it's a good buy. But to buy it on the way down, you're not giving yourself any probability.
And even in this name, it's like you can see, from March until basically end of August, we've seen higher highs and higher lows where this is like one of the first times we're starting to see these lower highs and lower lows where like that trend is not, the uptrend is no longer intact in this name for now. It could, might be a little bit of an avoid for some time. Next up, we have this J&J. She's looking to buy it verse 144.
So, I mean, again, I like, and that's that 200-day simple moving average area. I like the area she's looking to buy. We just have to wait till it's on the way up. It's pretty simple. It's just don't buy these things on the way down. Let them put in a low and look to buy on the way up, and then use that new low as your stop. That's the only thing she's messing up with. But other than that, pretty good stuff.
You jinxed it. We got two more for her. Next up is UPRO. UPRO.
This one's all you.
All right, so we're going to go through them quickly. It's UPRO and also TQQQ. So these are both short, TQQ is short Qs, and then UPRO is going to be a short SPY. This is a perfect example of being late to a trade. So especially when it comes more to shorting, people always want to short like at the, if it's a short-term move, like if it's a 10% correction, people are looking to short when the market's down 9% or it's down 11 and about to reverse. So these are names where it's like this TQQQ has dropped 50 points. So my thought of how she's looking at it is it's down 50 points. She's going to buy it here. Like these other examples, versus a random out on the way down, expecting to risk 5 points or 10 points to make 70. When if we save this from a month from now, we look back at this name when it's at 120 now, a month from now it's at 60, and she's down 50% or gets stopped out. These are the things that we don't ever trade.
You think TQQQ is going to 60? Fam. I hope
like
not. Look, and the market's going to fucking die if TQQQ goes to 60.
No, but the thing is with how these rebalance daily, it's like, it's just like this, like, I don't care where the market's going to go, like the market will go on, but how these are just engineered, they just don't, when it's out of their favor, they just slowly.
They're not swing trading vehicles. I get you.
No, yeah. So you can't like if you zoom out, it's like just avoid these. Avoid the leverage ETFs. Anything Drexion related or ProShares, anything leverage, it's just easy to avoid them because they just get very costly very quickly.
But they're so sexy. They're so sexy.
That looks so sexy.
We got some stories behind these names that are very costly lessons that we learned the hard way. Next up, we have a question on Tesla.
Had to be. Can't get through a day.
I know you touched upon it. I believe in the Stock Tips podcast. If you want to maybe go over that a little bit, if you want me to ask the question that's been.
Yeah, no, I mean it was just like, do we think a short-term top in Tesla is in? And I think with the price action, and it have its worst day of all time today, down 21%, you have to be thinking, we're not touching these highs anytime soon. They announced the stock split down here, and it was 275. They went on that crazy run to over 500, and then when the stock actually split, that's when it was a sell the news situation. So when things go vertical, they have to consolidate. I wasn't saying it had to come down because I think anything bad about the company. It's just we see this price action with all of these things that go vertical. When we started our careers at the prop firm, it was the 3D printing stocks. We saw it with the Bitcoins. We saw it with GoPro. And we saw all these different examples where it's like they just can't maintain this price action when things go straight up. So they have to come down. They have to consolidate. That's very unhealthy when a stock goes straight up like that because it has to, at some point consolidate. That was really it with Tesla. It's just...
and it didn't mean to cut you off, but even with Tesla earlier this year, when it had that first run up to 1,000 and it was that crazy, it eventually pulled back about 60% before going on this next monstrous leg. So as crazy as this price action gets, you almost need these dramatic and painful pull-ins to kind of push people out and shake them out for the next crowd to come in and then chase it. Because it's the people that were buying 500 in Tesla split adjusted at 350, they weren't the same people that were buying Tesla pre-split at 75. So it's a different crowd that continuously comes in and pushes these things up. But I think for us, even just seeing it getting brought up on the secondary news was just kind of hilarious because
so
secondary also dilutes the stock. But again, that's the crowd that's buying the name,
Right, and then they got smoked the hardest. That's why we saw this 5-day, pull-in of almost 40% now. Pretty crazy.
Yeah. I've been to like 3 parties recently. Sparrow had a Southbound party a couple days ago, Labor Day party, etc., and engagement party. All 3 of them somehow I got roped into a conversation about
everywhere I go is Tesla. Everywhere I go,
and it starts with Tesla. It starts with I just bought Tesla, and then the next line is I have a bunch of long-term holdings in weed stocks, and I'm down in all of them except for one. And it's like, and every time I just look at my girlfriend, I'm like, did you see that? Like every time it's the same conversation, and I'm just sitting, I'm like, oh, so you lost a bunch of money in the prior idea. This is a new one, but it's different this time. But you're also now losing money in this idea, and it's just like.
And the idea is popular among you and all your friends who have no fucking idea about the stock market, but weed is tight, yo.
Weed is tight. Weed is tight. That's awesome.
That's awesome. Weed is awesome. It's like,
and it's always you're like, oh, you work in finance, and it's never like asking the question. It's just them telling me like their idea. And I'm just like, oh god, I feel like it's Groundhog Day.
Morning! See the groundhog?
yeah.
Think it'll be an early spring.
Didn't we do this yesterday?
I don't know what you mean.
Don't mess with me, pork chop. What day is this?
It's February 2nd. Groundhog Day.
Yeah. Sorry. I thought it was yesterday.
Oh.
All right. Anyways, so this is the main reason why we avoid stock splits. Anyways, next, Angie's looking at TSM. He wants to, again, a lot of these buying on the way down ideas. He wants to buy it versus.
What is on the way up right now, bro? What's on the way up? What's on the way up? What are we buying on the way up?
I got a couple.
Besides the U Pro. The U Pro?
No,
my keyboard's funny.
Later.
Hold on. All right, TSM. Taiwan Semiconductor Manufacturing. So what do they want?
He wants to buy, again, it's a similar, trying to buy on the way down 77 versus the 76.
So this one, the other ones, I was like, all right, wait till it puts it at bottom. This one just looks like a top. This one looks like a great short setup, honestly. It's just, it had an incredible run. It tried to have this upper level flag to go higher. It couldn't make that move higher, and we're seeing the failure now. We're seeing the 8-day and 21-day simple moving averages cross over. We're seeing the stock just kind of bottom out towards the flag. It just looks like this one's ready to fail. So I don't think this one has enough support underneath it to look to buy this one very, very quickly yet. I would wait till 65 to buy this, honestly.
Okay. Next question, we have the NKLA and GM news. They're asking, what happened is, what, if they have NKLA, what should they do with the stock?
Do they have Nikola? this company's the biggest fucking finesser of all time. It was, this whole deal with GM is so incredible. So GM isn't paying them anything. They're not paying them $1. Nikola is giving them 11% of their company, which is valued at $2 billion. But this company did $36,000 of revenue last quarter. So what the fuck does it matter? You're giving up 11% of your market cap. Now you get GM's know-how. They're getting all their parts and manufacturing. And now GM is actually going to make their electric vehicle, the Badger, and they're going to put GM's own fuel cell and hydrogen cell batteries in and shit like that. So it's like, they just got this. I mean, if they're long, just have a stop at low of day here. And honestly, like, this is such a massive catalyst to the upside. I might, if this flagged out below this 54.50, below these highs, I would probably look to buy that 54.50. The valuations are so dumb and stupid, but I mean, the price action is all we really care about, and this is a massive positive catalyst for the stock. Now they have, now they have just such a know-how in the market with GM backing, so very positive.
All right, and then the question was about Apple, about this new iPhone event that's coming out, the iPhone 47.
Apple, September 15th. So we've all been waiting on the what is it, the iPhone 12? Is that the next one? iPhone 11. So this new one's going to have 5G, and that's what they're supposedly announcing. They got new iPads on the way, new Apple Watches. Just going to be a huge, Christmas season delivery for Apple with new shit, pretty much what they're telling us.
All right, and then next up we have someone asking about Lulu's earnings.
So Lulu, they're getting pretty crushed after hours, down 7%. Their earnings weren't too bad. I think this is really a factor of the market coming in, things like that. They beat on their revenue, they beat on their top line and bottom line. So you like to see that, especially with the pandemic. But they have no forward guidance because of the uncertain COVID times. So I mean, looking forward though, the CEO really thinks that we're going to have this massive shift, and everyone's going to be working from home forever. So just buy the shit out of these sweatpants and the sweatpants company, because that's the massive change in trend that we're seeing right now.
All right. So we wrapped up some of the social media questions. We'll jump into the good trade, bad trade, and we got Garrett Eddy with
Garrett, what up, baby?
The WSM trade.
Hey, man, nice. Yo, so me and Garrett had some video chats about his trading, and I'm very happy to see this trade. So what we worked on is just being more systematic about his sales and kicking things into thirds. And what he wanted to do is take some profit on the first third, try to kind of pick a top on the second third, and then get stopped out of the last third. And that's what he did here. Obviously, he can work on the execution looking back on the trade, but now that he's got the systematic, premise, just good to see the improvements. So what he's going to work on is his first kick. Obviously, it's always easier after the fact to be like, you should have waited and kicked more into strength. But if you can avoid, kicking for like $2 when you have a tight stop, maybe that's a 1-to-1 kick or whatever it was. But that's really the only place that I could see he messed up. Other than that, pretty great trade. I like it. Bought this 89, kicked the third, got stopped out of last third. Boom.
And I think even with the thirds, I think, you and Garrett talked about this. I feel like in time, again, you mentioned you might kick that first a little bit too early. It's like the next trade he might hold to that extra day, and then you kind of get that patience of holding that winner and stretching out those thirds. So we'll see if, as time progresses, if those kicks get better. Next up for Garrett, again, you spoke with him more than I have on his recent trades, and I want to go through it. His VRM trade.
All right. So yeah. A bit quick of kicks on the first 2/3. I love how he's using the third strategy. Then he was able to hold into earnings, came back to his price because he had that 20% cushion. So he kicked the first 2/3, holding his last third for this run. Didn't get any. So here's what's tough about this, is what I hate about this, is you kicked your first 2/3 of stock, one for $1.30, the next for $4, and then at some point before earnings you're like $20+ in the money, and there's no profit taken there before earnings, and you wanted to hold that stock into earnings. So for me, if I had these first two kicks where on a chart they don't look that great given what the name has done, I'm not taking the stock into earnings. I'm taking the win off at 68 there, because he only booked a couple dollars in profit. So just going forward, I wouldn't hold that into earnings. And then but he did hold it into earnings. He was able to hold on. New stop low day there, and then you can't get and he held that one, got stopped out of last third here. So I like that part. I like that aspect. But yeah, overall, wouldn't have taken it into earnings, but did a nice job once he did.
Mm-hmm. Now, when it came back and still respected that 52, which was, I would assume, his break-even stop, after it reported, would you look to get back into it and buy, buy it maybe through 60 when it started to flag, or just kind of leave that remaining third as it is?
Given that he hadn't taken profit, I would have leave the last third. I mean, it again always looks easier after the fact. The fact that it's taking out this IPO high on an earnings flag looks really nice. I just hate when stocks gap down on earnings. I will never not have trouble buying those stocks.
Mm-hmm. All right. And then lastly, he has this Slack, WRK.
Slack, worked. Nice. All right. What he bought this support by 28.50. Right on, brother. I was there with you. Kick third there. Look at my guy. Oh my God. This is the best of all three. Kick that first third into strength. Looks quick, but before you see any of this action, that's a nice kick. Second third, he was patient with. It was a really good kick, and then he got stopped that last third, literally at the top. If you're trailing it, you can't get stopped out of any better of a place than this. So you're seeing the trade-on-trade improvement. That's my guy. Good shit, Garrett. Love it.
All right, so next up we got Bobby Moore.
Sounds like it's your turn.
All right, so Bobby Moore, first one is this Chewy trade. When you have it pulled up.
Oh, it's up.
All right, so this was, again, a sport buy after the gap up. This was kind of referring back to some of those earlier examples where we were talking that we want to buy these things on the way up. We're not trying to buy them on the way down. And this is a perfect example. He was trying to buy it and almost be perfect for that 52.5. And he buys, he gets stopped out, and then misses the overall move. So this is, really nail on the head. And I've spoken with Bobby. He sent me about 500 trades, his trade journal. Went through a lot of trades. We picked out like 5 key themes, and this was one of them. Was just trying to, be too perfect on the way down, where we kind of want to see that shakeout and just buy on the way up first, thinking or expecting it to hold perfectly. And again, we saw the after effect of what the stock has done. And then next up for his good trade is this tandem, this TNDM. So this was the reverse. When you wait for the stock to pull in, in this example, we 4 or 5 days of pulling down, it started to flag out. Technically a bear flag, but we look to buy up if it's ready. This is exactly what it did. He bought up to 100. He had to stop in, and he kicked off into resistance as it was breaking out, and then he got stopped out for the rest. So this is like, again, if you look through the bad trade, it was buying on the way down near support, and then for tandem, buying support on the way up, and then it worked. So this is just a recurring lesson that when guys start to hammer in, you can avoid those Chewy trades and take more of the tandems, and it all works out the best for the most part. That wraps up the member ideas. Shake, if you want to jump into any of your trades, and then I'll go over mine.
Yeah, I was just day trading today. We can get into two dubs, 2 L's. I made no monies, but we can learn some things. Hey, how about that?
Sure.
So off the open today, Monday morning gap down, Monday morning gap ups. We try to avoid, buying anything new because we want to go opposite of the gap. So we got that big Monday morning gap down this morning. And here's what I did, when we're closing. So to give reference of why I was thinking long this off the open today. So, this trend line is very subjective. This kind of, get that out of there. So we're opening up right at Friday's lows. And we had recovered these lows so drastically on Friday. It was like a 4 or 5% move off lows Friday. So then when we're quickly back at these lows, on overnight volume, which is much less than, intraday volume, I'm always going to look to buy that. So I bought it off the open a little bit. I got stopped out, and then I was expecting a huge flush once those lows got taken out, because it was such an inflection point. If that support breaks, we're likely flushing lower. So when we just broke it slightly and we didn't flush really lower, there's huge volume, you could see, but we didn't flush lower. And that's what I was looking for. So I bought that stock back. I kicked that into strength, and then I got stopped out of my last piece. So I made a little bit of money there. This Google, I've been swinging this one, and I gave it, I gave a piece like 225 points back. Put a little hair on my chest. But it opens up today. It closed a few days ago, 17.25, and now I had a chance today, right at my opening price, right at support or whatever. So I was buying this one back, and then I bought new highs in it. When I initially wanted to kick some in this like 1580 area, it tried to push highs, and I saw there was just no juice behind it, so that's when I started taking profit. And then towards the end of the day, I got out of most of everything I had, and then would have been a positive day. Had to go back to the well. Went back to this Facebook. I thought we were going to bounce more in the Qs intraday when I saw this flag kind of happening. We weren't breaking lower, so Facebook was showing such great relative strength. So I bought this flag, and I just got out with the lower of the flag. So those are my 4. But you can see how when volatility hits, I'm quickly going to change my mindset to more of a day trading focus because the volatility's out there. There's so much opportunity and all of that, and we're just not really in a swing trading market after we see like 4 days of harsh selling. It's not like the time to put on swings just yet. So yeah, that was really it. I'm going to stick with the day trading for a little bit until we see some major changes. But other than that, I'm done. What you got? What you got for me, Mang?
All right, we're going to start with IIVI, which was my worst swing trade. I'm not going to remember. Probably this year.
What was so bad about it? Doesn't look too bad to me.
It's just a percent loss.
Oh.
But trading wise, this was what we've been talking about, buying up off the support. So this is something where, for Bobby Moore, for that Chewy trade, he was, in theory trying to buy like that 42, perfectly on the way down where, I kind of let it shake out that 42 and it started to set up a little bit, and I bought up through 44, first at 42. And it did, it was looking okay, but it just wasn't ready. And I believe it was on, I think it was Thursday or Friday, it was basically just opening at, 42.10, like pre-market. And I knew right at the open, I'm getting pushed out of this. Even if I get shaken out and it rips, it's like I'm going to be out regardless. But the thing got absolutely decimated that day and has done nothing but just trend lower. So this is a good example where in the moment, taking a 6% loss wasn't, the funnest thing to do. But now it's 15% lower. And that's the difference between getting out of, a painful loss in the moment versus getting trapped in a trade that you have to work out for months. So it sucked, but, I'll probably do that trade again if IIVI sets up again for a move through 45, maybe a few months, maybe we'll take it, maybe through 40, but that was the worst trade. Next up was this CERN, which was a name that was on both of our radars. I think it was the shakedown and big picture idea a week or two ago through 74.
Oh, I took it.
Yeah, you have the chart up?
Yeah, I got it.
Okay, yeah, so textbook, breakout. We bought up through 74. Day one it looked phenomenal. Day two, again, started to sell off, but this is why, at least a lot of trades I take, it's once it starts working in my favor, it's as quickly as I can move it to break even.
Let's argue.
I'm going to do that.
Let's argue.
Okay. Well,
it's a macro breakout. If you move your stop to break even the next day, how can you ever expect to be successful at macro breakouts?
That's why you got to pick your trades. For me,
trade you get a Visa once every 10 years that doesn't take out the low of the day. All the other trades, you're just going to be break even all the time.
Well, again, that's why we got to review these trades and figure out who's right or wrong. But for this trade, I bought it, break even stop, got out, and I'll buy, CRN right back, and the next time it sets up. And, there's no mental capital loss in this trade. And then lastly, we had this Visa, which was the, very easy.
There you go. There you go.
That a lot of us were in. I think the one mistake, even for me, was, again, for how crazy the market had been leading up into Visa running into 215, was I think, and even for myself, kind of took our eye off the fact that it was the retest. And again, we were trailing our stop as we always did, but I didn't take any off in that retest, which a lot of times we look at a lot of these charts when the first major retest happens, you can get that resistance. And again, 2 days later, it was right back to our price. Now, this is something where one of the guys hit me up and wanted to buy 200, and it was like, it's like on the way down. I'd rather buy this on the way up, where just because we bought 200 and went to 215 doesn't mean that now it's going to hold 200 and go back to 215. It can still easily go to 195, go to 190, 185. We don't know how far it can pull back, so I'd rather let this thing settle out and give it a couple weeks and then get back in on the way up versus trying to be perfect, trying to buy 200, with a very tight stop. So those were the few that I had for this week.
Nice.
And then, Shane, again, the top ideas for the week.
Top ideas. Would love to. So, all I'm doing today when the market's selling off, we're researching. We're finding the strongest names in the market. So we put a nice little list together. I'll highlight some of them, though. This is Beyond Meat. I mean, just held the support area so well. So above 140, that one could get going. What else we got? IOVA. Shouts out to Link. He put a nice little list together at the end of the day. I think this was his. IOVA. What else? This BTAI, another one. Holding up its support right here. So if we can get through the 44 area. What else? D-Dog. Just holding support here. These software names have been killing it. And, this Etsy's on my radar hard on the pullback. A little birdie told me it might be some good news coming about Etsy. Got keeping an eye out for a long setup.
Nice. I like that Etsy too a lot. All right, so I have 3. First, I got this SBAC. Still flagging. Let's see. Next up, we got STE. Another macro bull flag.
All right.
And lastly, IQV. Another macro bull flag to that 165. So these are the 3 that I'll be keeping an eye on.
All right. There you go.
And then with that, I think we'll jump into book of the week.
Let's jump right in. All right, Bennett. Book of the week. What you got for me, Holmes?
I got all this shit in the way.
By the way, I have a stack of books like to be read from Book of the Week. I'm behind the 8 ball here.
I have Rudder. This is by Daniel Flanagan. It's like a branding book. His premise of the book is like there's like 12 major brand categories. There's the Rebel brand. You think of Harley. Explorer brand. You think of Jeep. Jester brand. For recently, it's kind of like Barstool and Prez. A lot of brands for Secret. He goes through all these different brand archetypes that there are. For us, we kind of fall under the Sage brand where our primary business is giving financial advice. So it's kind of where we fall. They kind of break down each of them, the overall themes of what good brands do, what bad brands do. So if you're trying to start a brand, it's definitely easy read, 200 pages, but big font, so you can fly through this in like a day or 2.
Most important part.
Yeah. What about you? What are you reading, or not to read?
Honestly, kind of similar category. It's called The One Thing: The Surprisingly Simple Truth Behind Extraordinary Results. I really just I read like 2 chapters of these books and come in here because I'm so behind on all these fucking books. But this one's about how, and it tells a bunch of positive, successful entrepreneurial stories, how everyone focuses on one thing majorly first. And for us, it'd be trading. For Bill Gates, it was computers. And it has a million of these examples. But it talks about how people can really focus on one simple thing, and just put all their energy and direct all their energy into it. And that's how greatness really comes, from putting those 10,000 hours in. But again, I got to get more details before I get back to you. But it's good so far. The One Thing by Gary Keller.
And I think even for anyone who's still watching this, I feel like I'm even kind of running out of like good recommendations or good books to continue after these. So if anyone has read a good book, if you want to drop a comment below, please
tell me.
I definitely need some new
books
of mine, so I read it. All right, I think we wrap it up.
Wrap it up, B. All right, cool. See you guys next week.